To the Aspiring Trader YouTube channel. Yes, I need to get used to saying that. Oh yeah. Anyway, yes, welcome back to the Aspiring Trader YouTube channel. So I was just going through some old notes I had here, back from when I first started to, learn about trading and forex and stuff, and it led me to this article that I had stored in my notes, and this article is actually it's the first article that set me up for creating what is now one of my main trading systems, right? So, I said I trade two systems. I trade one, which is price action, purely price action based, which is what the majority of probably the YouTube channel will be about. And then my second system is an indicator based system. Well, that indicator based system stemmed from this article here, right? And it's actually an algorithm that I created that tells me what to do and when to do it, right? So, what is an algorithmic trading system, right? So, right here, this first paragraph kind of explains it or sums it up in a nutshell, right? So, what does it say? It says here, simply put, an algorithmic trading system is a programmed set of instructions that generate trade signals that can be executed right on the trading platform. Most algo systems or black boxes also include automatic position sizing and trade exit commands, right? So simply put, as it says, all you need to do is have a set of rules. So when all these particular things happen, you know where you're entering, you know what your risk parameters are, you know where your stop loss is going to be, you know where your take profit going to be, or where you're going to exit the trade, right? And I thought, well, I need to figure out how I'm going to construct some kind of algorithm, right? Because the whole idea behind this whole algorithmic approach or mechanical approach, as some people will call it, is to kind of remove any subjectivity from the markets, right? So in essence, you want to kind of remove your emotional attachment to entering and exit trades. Because if you have something telling you when to buy, when to sell, where to exit, what to risk, etc., you have to follow the rules, right? You have no other choice. So that to me would have been a very interesting and almost easygoing way or approach to trading, right? So as I say, it sent me down this very deep, dark rabbit hole of months and months and months of research and testing and figuring stuff out. And one of the books that I actually got to help me was this book here, right? Algorithmic Trading, Winning Strategies and Their Rationale. Ignore the winning strategies part. The book doesn't give you any winning strategies. It helps you create a winning strategy, but it doesn't actually give you a winning strategy, right? So it just puts you in the best possible position to kind of go about creating an algorithm, right? What sort of things you need to be looking for when creating an algorithm, right? So that book was very useful if you're interested in an algorithmic approach to trading. Now, the algorithmic approach doesn't need to be indicator based. It can actually be price action based, but I don't use price action for algorithmic trading purely because there's too much subjectivity in price action, and therefore you're kind of defeating the purpose of what the algorithm is set out to do, right? But an algorithm in price action could be simple, right? Very, very simple. You can do something as very basic as drawing a trend line, right? And you can say if the trend line is broken, so that's your first step. If the trend line is broken, yes it is, what direction is it broken in? In this case, it's broken long, right? It's broken up. So if it is broken up, then you're going to buy. If it's broken down, if there's a trend line beneath here, then you're going to sell, right? So first step, is the trend line broken? Yes. What direction is it broken? Up. That means I'm ready for a long position. So then you need to figure out, well, what is your stop loss, right? So you can say, well, stop losses can be swing lows or swing highs if you're going short, right? So in this case, for this example, we're going long. Stop loss is beneath the swing low or at the swing low. Then you need to figure out, well, what is your profit target, right? And you have to be very structured with what you're doing, right? So for algorithmic approach, right? For the algorithmic approach. So in this case, we could say we're always going to target 1-to-1. Or you could say you're always going to target the previous highs, you know, whatever. Whatever you decide to set as your rules, that could be your algorithm, right? So trend line, yes. Broken, yes. Direction, up. Enter. Stop losses below swings or at swings, target previous highs or 1-to-1 or whatever you define, right? That is as basic as a price action algorithm can be. Why I don't like it for algorithms is because there's too much subjectivity. Not everyone will draw their trend lines like this, right? Not everyone will identify the same swing low. Not everyone will, you know, I guess you can say this is the last previous high or this is the last previous high. Like, you know, there's too much subjectivity. You have to say, oh, well, which one do I target? Which swing do I put my stop at? You know, there's too much decisions that you need to make as a trader, which defeats the purpose of an algorithm. And I'm not saying that this is a good algorithm. I'm just saying that this is an example of what a price action algorithm can be, right? So my actual algorithm is based off of indicators, right? And to kind of illustrate what an indicator-based algorithm can look like, I'll just change my chart so it makes it a little bit easier. So because in this example, I probably want to use like some different colored candles and stuff, and all my candles white. So let me just change to a basic layout. Okay, so this is probably what everybody will probably get when they first sign up to TradingView, right? You'll get green and red bars, and then you'll get this volume indicator at the bottom. And you know, so you have an indicator, you have your chart. So what an indicator-based algorithm can look like is very simple, right? You can say, and again, this is not an algorithm that I suggest, but I just kind of given an example of what an algorithm can be. So let us say, for example, the first step in your algorithm is to identify the color of a candle, right? So let's identify this candle here as a green candle, right? So you have, does the chart have a green candle? Yes, right? Is the current candle green, right? Yes, it is. So let's say we were at this position in time, right? Then you can say, okay, so candle is green. Then you look down. Is volume green? Yes, volume is green. Okay, well, those are two steps. I'm ready to take a position. That is as simple as an entry position can be. So then you just need to figure out, well, what your risk is going to be, right? Where you're going to put your stop loss. So you could say, okay, if every time I see a green candle and there's a corresponding green candle in volume, then I can enter a position long, and then my stops will go beneath the green candle, like beneath the low of the green candle if you're going long, right? So in this case, you would enter here. Stops will be at, stops will be at the low of the green candle, and your target could be anything, like, you know, 1-to-1. Let's say you always target 1-to-1, right? And that is as simple as an algorithm can be with an indicator. Again, this is not a good algorithm, but you get the idea, right? But you know, we could fine tune it even a little bit better to, you know, because let's find, so that was a winning trade, right? But let's find like a losing trade like here, right? So green candle up, is a green candle on the chart? Yes. Is there a green candle in volume? Yes. You would enter long here. stops would have been beneath here, and you'd have gotten stopped out straight away, right? So instances like this is where you'd want to try to fine tune your algorithm, right? So you'd want to try and filter out losses. You identified where you can pick wins up, right? So here, right, you've got green candle on the chart, green candle in volume. You would enter here, stops beneath here, target 1-to-1. That would have been a winner, right? But there's instances where you pick up losses like these, is you'd want to try and find some way of filtering out these losses, right? And a simple way of doing that is probably saying, well, okay, I will only want to sell when price is going down, and I only want to buy when price is going up, right? So you need some way of figuring out, well, if price is going up and if price is going down. And a very simple way to do that is, a very common way to do that is by using a moving average, right? So let's do exponential moving average. Okay, so a common moving average that everybody uses for trend identification is like the 200-day or 200 period moving average, right? So if price is above the 200 period moving average, then it's considered bullish. If it's below the 200 period moving average, then it's considered bearish, right? So shorts beneath, longs above. Let me just make the moving average a little bit bigger so we could see it. Okay, that's a little bit better, right? So now, you'd, in this instance here, with this what would have been a losing trade before, green candle on volume, green candle on chart, green candle on volume, but you wouldn't have taken this trade because it's below the 200-day moving average, right? So in this case, what you would have done is taken the red candle. So red candle on chart, red candle on volume, you would have taken a short position, and that would have possibly worked out to be a winner, right? Now, you can even take, so we've just by adding the 200 period moving average, we've filtered out that loss there, right? This still remains a winner, but this no longer becomes a loser, right? And then you can even go a step further and you filter out even more losses. Because let's say, for example, we were to take a short position here, right? So we have red candle on price, red candle on volume. We're beneath the 200 period, so we would have entered short here, and we would have been taken out of that position straight away because price went bullish, right? So let's see if we could filter out some more losses. So on the volume indicator, we can add a moving average, right? So this is a 20 period moving average that's added to volume, right? So then we could say, well, okay, now we have this filter on the volume indicator. So then we could say, well, okay, only if a green candle appears on the chart and it's above the 200 period, and the green candle appears on volume and it's above the moving average on volume, then it's okay to trade, right? In this instance here where we picked up this loss, that would have still been a loss, right? Because the red candle is above the moving average on volume. So that's still a loss we'd want to filter out, right? So, okay, well, what can we do to then filter out a loss like this? And this is how you think when constructing an algorithm, right? You want to look for losses and filter out losses. So this would have still been a loss. Well, okay, well, let's try to filter that out even further, right? So what can we see here? So we can see, well, okay, we can say something like, okay, instead of looking for the green candles on the chart alone and green candles at the bottom alone, or just the colored candles on the top and the bottom alone, let's look for a sequence instead, right? So instead of, we can say something like this. So let's try to filter out this loss. So what if we said, if a green candle appears on volume, followed by a red candle, right, immediately followed by a red candle on volume, and price is beneath the 200 period moving average, then we'll take a short position, because what that says to me, volume has switched from long bias to short bias, and then I probably want to get involved, right? And therefore we'll only take positions on switches of color. So green switches to red. Yes. Is the red above the moving average? Yes. Is price beneath the 200-day moving average, 200 period moving average? Yes. Cool. You can enter a short position here. Stops being above, in this case, the candle, and you target 1 to 1, right? Or 1.5 to 1, or whatever you want to do. That would have been a winner, right? Here we've already filtered out this loss. This would have been a winner because green candle on volume switches to red. Is the red above the 20 period moving average? Yes. Is price beneath the 200 period moving average? Yes. You would have entered a short position here. You might have got taken out with this wick here, but you know, that would have been an entry. Again, let's look here for long positions. So red, we're above the 200 period. Red switches to green. Is the green above the moving average? Yes. Green on price. Stops would have been beneath here. That would have been a nice winner. Let's look again. Red switches to green. Right? Is the green above? Yes. So we would have entered on that candle. That would have been a loss, right? But then it switches again. That would have probably not been a trade because it's not above. You look again, red, switch to green. Is the green above the average? Yes. Price is above the 200 period moving average? Yes. You would have entered a long position here, and that would have been a nice winner. So you get the idea. So you can quite easily, using not very good indicators, construct a very simple rules-based approach to trading. And you always know when you're going to enter, where you're going to exit, how much you're going to risk, and it takes the whole emotional aspect out of the trading, out of the trading approach, right? But like I say, this isn't a very good algorithm at all. Maybe I might, I might do some videos where I construct an algorithm based off of different things, and go back and test it, go and test it over a period of time, like a year, a couple of years, a few different pairs or something, and see how it performs. But, I just wanted to kind of make this video to illustrate how I went about in my journey discovering what is now one of my main trading systems. Anyway, so I hope you enjoyed the video. If you did, feel free to subscribe. Feel free to join me on my journey with my price action strategy. So far it's going okay this week, and I'll do a recap video at the end of the week. But yeah, thanks for watching, and I'll see you in the next video.